Hello everybody, live market rundown. First of all, before we get into the markets, I want to answer a couple quick questions. The first one is how to actually identify areas of imbalance. And this is actually quite easy. The way it goes is if you look at, let's say, a leg up close, you can see how always the wicks, not of the next, but of the candle after that, always touch. As you can see, the wicks always touch. But very sometimes, not often, we get a price action where the wicks do not touch. Shortly after, as you will see, it gets filled. And that is what we call the fill of the imbalance. This is actually very interesting. As you can see, it actually just happened here. So how we look at that and when it is significant, not just on the couple candles afterwards, because then it's not really that interesting. But as we know, we always, let's say in this example where we're looking for longs, we have an impulse up and a correction down. The difference between these two legs is that this one will leave imbalance just because of the sheer speed that it's making its move. The wicks don't always reach back and tag that last wick. On this level, on this leg, it will. So that's exactly what you're seeing here. We went up impulsively, thereby creating imbalance. As you can see right here, this is imbalance as well. As you can see right here. But on the movements down, it doesn't really happen. As you can see here, we did have some imbalance shortly after it came up, tagged it in, came down further. It's always filling the imbalance on the correction, but leaving it behind on the impulse. So what we then do when we're in the correction, we notice when we're coming down, and we're in this case, and at least, that we're having imbalance. So as you can see here, this wick got filled perfectly. This is for our imbalance. It came down all red candles and then it hits it and then it reacts. The reason this actually happens from a deeper level is the fact that when imbalance is created, it means that very large orders are coming into the market. As you know, market always has sellers and buyers and sellers. So when the orders from one side, in this case over here would be the buyers, is that large, it creates literally an imbalance, an inefficiency in the market because there were so many more buyers than there were sellers. So the moment that actual price gets hit where this imbalance started, you can see we always get a little reaction. Just as everything in a strategy, there's not one thing that you should be on the lookout for, but this is one of the most powerful things in terms of the strategy because it shows when very large orders enter the market, and you will always get some type of reaction when it reaches that price again. And that's why it is one of the aspects that creates an area of interest. But as I always say, it's an area of interest, not an area of entry. So that brings us to the second question when I got asked about liquidity. Now, what is liquidity? Liquidity is literally when we're coming down, again, I'm talking in a long example, liquidity, we're coming down, we create fake support. That's when we know the retail crowd is looking because you need 2 points to form an area of support. So when it comes back in here, they will buy and they'll put their stops under this level of support. Now, as I just explained, a market always needs buyers and sellers. Now, the big players that we're often talking about, their orders are so large that if they want to buy and literally get their huge orders in, they need a ton of sellers. Now, how do they create a ton of sellers? When you have a lot of people placing buy orders, but their stops gets hit, this will be a lot of sellers. When you place a buy order and then you close a buy order, you have to execute a sell order. The broker does this for you. It's called a stop loss. So that's what happens. So what they do is they entice everybody to buy, and then they actually take out these stops, thereby creating a ton of sells coming into the market, and that's when they enter and take the other side of all these stop orders with all these buy orders. And as I have just explained, when a lot of orders come into the market, it creates imbalance. So the reaction from the takeout of liquidity is often an engulfing that literally swallows up the other side of the market, being the sellers here. It engulfs it with a ton of buy orders, leaving behind imbalance. And that is exactly where we put our entry, that level of imbalance. So that's why you often get, after liquidity, you get the reaction with an engulfing, leaving behind imbalance, and then it tags you in, and that is when you know we're in the trade off to our target, because you know the big players have done what they had to do, and you know the move has started with the big players that have taken their position. So that is imbalance and liquidity and how it actually works together. As everything in the strategy, everything works together. Every layer confirms the previous layer until it builds up to the actual entry. I'm actually very excited about something me and Ed are creating, which is a new bootcamp. The bootcamp is truly insane. If you're in this group and you haven't been part of the bootcamp yet, I truly encourage you guys, because to be honest, it would be insane not to use this. I go over basically everything completely for free, and you'll truly enjoy it. I absolutely guarantee you will learn a ton of things. But let's get into the charts of today. First off, we have USD CHF. As you can see on the daily, we are bearish, but on the 4-hour, we are bullish. The 4-hour hasn't reached its 4-hour fib extension yet, so we know we still have some upside. So what do? We zoom into the 1 hour and get a little piece of the action. As you can see, we are forming some areas of liquidity already right here, so this is quite nice. We also have some liquidity over here and even some liquidity over here. So how do you know which one will actually be the area of liquidity that the big players will use? That is when you get the formation. That is what confirms the actual level of liquidity, the actual level of entry. Now, how do we know around which area will most likely happen? As you can see here, we have some daily imbalance. The strategy always works top down. The highest time frames provide the highest amount of confirmation. So that's why I'm looking at this daily level of imbalance. If we come down correctively, filling this daily and 4-hour level of imbalance, and we show the formation I've just described, we'll be able to buy into the 4-hour fib extension. GBP USD, quite a similar setup. The 4-hour is going down. It has not reached its fib extension yet, and the daily hasn't either. So we can zoom into the 1 hour and do it all again. Impulse down, leaving behind areas of imbalance. We are now correcting while filling our areas of imbalance. And this is also very interesting. In the middle of a correction, they often try to pull you in prematurely by making engulfing candles. Like this is actually an engulfing candle. But do you want to enter here? No, you don't, because we still have this level of imbalance left behind. So this might actually just come in, tap this imbalance and go up further. So don't fall for the trap. An engulfing that is filling imbalance is not an actual engulfing. It is actually just filling the imbalance. That's some next level stuff for you guys. Keep that in mind. GBP USD, looking for shorts, preferably around these areas of 4-hour imbalance. Australian dollar, US dollar, we still have the 4-hour move to go. As you can see, quite a lot of selling pressure leaving behind a 4-hour wick. So let's look at the 1 hour, see how things are moving. It is forming multiple levels, multiple legs, but we still have some imbalance over here. So I'm expecting higher prices, but that would be nice because that means we have much more to profit. USD, JPY, 4-hour still making its move up into their fib extension levels, 4-hour and daily. So we zoom into the 1 hour yet again. As you can see, same stuff, expecting it to fill these levels of imbalance and then come down, possibly forming liquidity, tapping into the imbalance of the 4-hour below, and then we'll see if we get the reaction. And then you know what we can do, right? We can enter the markets. GBP AUD, let's look at this top down. As you can see, daily we are going up. So this is always a great situation. As I told you guys, top down. So if we are making a daily higher low, we know we have a ton of room left towards the upside. So on the 4 hour, you can see we already broke structure, confirming that we are no longer in a downtrend, but now in an uptrend. So we look into the 4 hour, wait for the correction. As you can see, lots of imbalance over here. So waiting for a corrective move down, and then I will be buying here in line with the daily, and I will be adding on the 1 hour and the 15 minutes. So this is very exciting stuff. I hope you found this very interesting, as I did provide a lot of information about the strategy. I hope you guys really understand it. And as always, if you have any questions, get them in before tomorrow around this time, and I will go over them in the market rundown. I'll keep you guys updated, and best of luck in the markets.